Hi everyone. Over the last couple of weeks, I have received a query from various NRI clients who have settled abroad and have assets in India and have assets outside India and wanted an optimum succession structure in place. Now let us analyze a situation where a person who was an Indian resident in the past or an Indian citizen, now he settled abroad and he has a mix of India assets and the overseas assets comprising of shares, immovable property, other securities, and he has a family who are the overseas residents, and family comprises of wife, sons, or daughters. So let us analyze what should be the optimal succession structure for such person. Typically, in these kinds of situation, what we generally advise is that such person should have an India trust for the Indian assets and an overseas trust for the overseas assets. And the beneficiaries of both the trust can be the family members of such person who are resident outside India. Now, what should be the various parameters or the consideration that such person need to keep in mind? So the first consideration is that what should be the nature of the trust? Should you set up a determinate trust or should you set up a discretionary trust? The second consideration is that who should be the trustees of the trust? Whether the trustees for the Indian trust should be the Indian residents or the Indian related family members, or non-resident can also act as a trustee in that trust. So the appropriate mix of trustees should be decided. Third consideration is that whether a settler can also act as a beneficiary of the trust. So this is purely from the inheritance tax safeguard. Now India does not have an inheritance tax, but the overseas country in which you are settled may have an inheritance tax, and accordingly that should be kept in mind. One important point for the India trust is that whether the non-resident family members can be added as a beneficiary in the trust. This is purely from an India exchange control standpoint. And the last consideration is that whether you should settle all your India asset in the India trust and all your overseas asset from in the overseas trust. So this is purely from your personal guarantee standpoint. Because if you are doing a business in India, so bankers or the lenders generally request for the personal guarantees, and you should have some assets in your personal hands in order to provide the personal guarantees to the lenders. Let us analyze what can be the various tax and regulatory consideration. Now, for an India trust, purely from an income tax perspective, because all the family members are non-resident, if the trust receives any income, whether the income tax will be levied in the hands of beneficiaries upon accrual of income or upon the distribution of income from the trust. So this will purely depend upon the nature of the trust, whether the trust is discretionary or a determinate trust. Secondly, what could be the overseas income tax implication on the India trust? So the jurisdiction or the country in which you are settled may also levy the tax in the beneficiaries' hands, and then we have to analyze whether the taxes paid in India will be available as a set-off against your overseas tax liability. The last consideration from an income tax perspective for an India trust is the place of effective management related consideration. If you have an India trust in which the majority of the trustees are the non-India resident, then there may be a risk that such India trust may be taxed in the foreign jurisdiction depending upon the country in which you are settled. From an India exchange control perspective, the first consideration is that how much income that you can take out from the India trust outside India. So it will depend upon whether the income will be current income or a capital income. Current income is repatriable without any limit, and capital income is subject to $1 million per annum per beneficiary. Secondly, you have to also see the compliance and reporting obligation from an India exchange control perspective. The third consideration from an India regulatory perspective is the stamp duty. If you are settling an India immovable property into the Indian trust, then stamp duty will also be applicable on settlement of the India immovable property based on the circle rates in the respective state. So accordingly, your income tax and regulatory implication will purely depend upon the nature of the trust, whether the trust is a discretionary trust or a determinate trust. So a careful planning should be taken into consideration while setting up any structure in place. Plus, for the overseas trust as well, if you have majority of the trustees who are Indian resident, then the overseas trust can also be under the ambit of the India regulation. So a careful planning needs to be done for setting up all these structure in place. So if you need any help in planning your overseas or India affairs purely from a structural perspective, direct message me for more details. And if you wanted to understand any of the above topic in detail, I'll be happy to help. Thank you and have a nice day.